Something unusual may be building in the global financial system right now, and most people aren't paying attention to it yet. Behind the scenes, one of the largest liquidity engines in modern finance is approaching a pressure point, and if it begins to unwind, markets could reprice much faster than investors expect. For decades, global markets have quietly relied on a mechanism known as the Japanese carry trade. It may sound technical, but its impact has been enormous. Trillions of dollars in capital have flowed through this system, supporting asset prices across stocks, bonds, real estate, and even cryptocurrencies. And now, according to several sharp macro analysts, the stability of that system may be starting to crack. One of the voices drawing attention to this possibility is macro commentator Jake Claver, who recently pointed out that the conditions for a major liquidity event may already be in place. His argument is not that something speculative might happen years from now. His argument is that the structural ingredients for a serious market adjustment already exist, and the window for change could be narrowing. Now, this is important to understand. Markets rarely send clear warnings before major liquidity shifts. They don't gradually prepare everyone for what's coming. Instead, they move suddenly when leverage begins to unwind. When large financial structures start to break down, markets don't slowly adjust, they reprice. And if the Japanese carry trade truly begins to unwind at scale, that repricing could ripple through nearly every major asset class. But before we jump to conclusions, we need to step back and understand the bigger picture, because this isn't about fear or hype. It's about understanding the mechanics of global liquidity and why they matter. Welcome to Updates of XRP, the channel where we break down the latest XRP developments, macro financial shifts, and the deeper structural forces shaping the future of digital assets. Our goal here isn't to chase hype or short-term speculation. Instead, we focus on understanding how the financial system is evolving and where XRP might fit within that transformation. In today's video, we're going to take a closer look at a fascinating intersection between global macroeconomics and blockchain infrastructure. First, we'll explain how the Japanese carry trade became one of the most powerful liquidity engines in the global financial system. Then we'll explore what happens when that system begins to destabilize, and why liquidity events can move markets far faster than most investors expect. But perhaps even more interesting is the question that follows. If global liquidity conditions begin to tighten, how does the financial system respond? And why are some analysts suggesting that infrastructure assets like XRP could become more relevant during periods of financial stress rather than less? These are not simple questions, and the answers require looking beyond short-term price charts. Because the story here isn't just about whether XRP moves next week or next month. The real story may be about something much larger, a gradual shift in how value moves through the global financial system. If the traditional liquidity mechanisms that have supported markets for decades begin to show signs of strain, institutions will inevitably start searching for more efficient ways to move capital across borders. And that's exactly where technologies like XRP start to enter the conversation. But before we get ahead of ourselves, we need to understand